Hello creatives! In this video, I'll share with you how to invest in stocks for beginners with little experience. I'll give you the essential information to help you start your stock investing journey today. Historically, stock investors have always enjoyed generous returns over time. Stocks grow with the economy, and over the years, stocks have averaged 10% in annual returns. That means stock investors can stay ahead of inflation since the average inflation rate is less than 10%. Even better, stocks are easy to buy and sell. You can buy stocks online through a broker or even via financial planner, and you can sell anytime for quick cash. But is it all merry and rosy? Of course not. A lot comes with stock investment, and you need to prepare yourself by understanding fundamental principles for successful investment. You need to understand the key terms, types of stock available, what to look for before investing, and critical considerations before stock investing. This way, you'll know what you're getting into and how you can reduce the risks and reap immensely from your new portfolio. I'll also show you how to apply the 4M rule in picking the best stock on the market. But before then, if you are new here, consider subscribing to this channel to continue receiving great videos like this one. Don't forget to hit that notification bell so that you can stay informed every time I publish a life-changing video. Let's get started. What are stocks? Stocks refer to equity investments or shares in a company that represent legal ownership. You can make a profit from stocks by day trading or from quarterly or annual payments that we call dividends. Dividends generally pay you passive income the entire period of owning stocks. Other terms worth noting. Stock exchange. A stock exchange refers to a verified entity that brings stock traders together and lists companies for trading. Two of the world's largest stock exchanges are the New York Stock Exchange (NYSE) and NASDAQ. The NYSE, also known as the Big Board, is the biggest stock exchange in the world. By April 2020, its market capitalization was estimated to be more than $25 trillion. On the other hand, NASDAQ has a market capitalization of more than $10 trillion by April 2020. The stock market. The stock market refers to a public market where stocks are traded. It used to be a physical place, but stock investors can now trade without physically seeing one another thanks to technology. What type of stocks can you invest in? There are so many forms of stocks, but what I'm going to cover are the most common. Number 1. Common stocks. Common stocks are just what their name is suggesting. They are the most typical equity investments, which earn you some company shares and the right to vote. You may also earn dividends as a shareholder. I use the term may because the dividends are variable and thus they aren't guaranteed. These are best for investors targeting long-term growth and dividended income. Number 2. Preferred stocks. Preferred stocks are just as popular as common stocks, and they refer to company shares that pay fixed dividends. The shareholders receive preferential treatment, thus the name preferred stocks. Simply put, some shareholders first receive dividends before others, and in case of liquidation, their claim on assets is greater than common stockholders. Compared to common stocks, market prices for preferred stocks are less volatile. The investments are less likely to lose value. Unlike common stocks, however, you don't have the right to vote as a shareholder. Best for investors looking for constant passive income. Number 3. Income stocks or defensive stocks. Income stocks are types of stocks that provide you with stable earnings and consistent dividends. They are sometimes referred to as non-cyclical stocks, and the companies mostly run businesses tied to the world's economic cycle. You can buy income stocks from real estate businesses and energy companies, best for those who want a stable income. Number 4. Growth stocks. Growth stocks are generally the stocks that you purchase for capital growth and not for dividends. They are essentially equity investments in companies enjoying positive cash flow and those whose earnings are projected to grow at an above-average rate. Best for investors who are interested in capital gains and not dividends, those who are ready to take huge risks. Number 5. Initial public offerings. An IPO refers to when a private company looks for public investors for the very first time. It's usually the best way you can invest in a new company and grow with it. In addition to raising money for the private company and making it public, an IPO helps companies build their credibility. Best for those who want to invest in stocks at an early stage. Number 6. Exchange-Traded Funds, ETFs. An ETF is a security basket that you can trade through a broker at a stock exchange. ETFs appreciate and depreciate depending on the index they are associated with. Best for passive investors who are looking to diversify their stocks and enjoy lower stock trading costs. Number 7. A mutual fund. Mutual funds are open-end investments where investors pool money together to buy stocks or other securities. Mutual funds are more like ETF, only that they are actively managed to enable investors to beat the competition and make profit. Best for active investors who are looking to diversify their stocks and enjoy lower stock trading costs. Number 8. Cyclical stocks. Cyclical stocks are equity investments whose performance depends on the state of the economy. In most cases, these companies deal with things like housing, automobiles, and equipment. Best for those who don't mind getting in and out of stock trading depending on the economy. How to know the best stocks to invest in. Do the following when shopping for the best stocks to invest in. Go to the stock exchange. Visit NYSE or NASDAQ to see some of the most traded and best stocks you can invest in. You can do this online. Check the fundamental analysis and technical analysis. Stock prices are likely to change at any time, so what smart investors do is study past and current patterns to predict future trends. One strategy that they employ is by checking the fundamental and technical analysis of stocks. So, exactly what do these terms mean? Well, fundamental analysis is when you analyze securities by primarily looking at the stock's intrinsic value. So, you look at stock trading data from the past and the present, including economic reports, stock market statistics, company management, and long-term projects, and even the trending stock news. For that reason, fundamental analysis is best for long-term investments. On the other hand, technical analysis is done using stock charts to predict future stock market trends. So a decision is based on past stock data alone. As a result, technical analysis is preferred for short-term investments. Decide on the best stocks using the 4M rule. Picking the best stock to invest in is not easy. You've got to do your homework, and I have the perfect formula for that. I'm recommending the 4M rule, which dictates meaning. The company that you want to buy shares from should mean something. Simply put, you have to have confidence in the company. Management. So many companies go bankrupt and collapse due to poor management. You wouldn't want to fall victim. So, do your due diligence to ensure the management is reputable. Moat. The company should have structures in place from stopping their competition from taking away their market control. That's called moat, and it's the reason why Coca-Cola continues to rule the soft drink world despite having so many soft drink competitors. The margin of safety. This is when you buy stocks when their price is less than their intrinsic value. How do you start trading in stocks? Number 1. Opening an account. You can open a stock trading account through a stockbroker. You can open a stock account through either a full-service broker or a discount broker. Full-service brokers charge more than discount brokers as they provide you with more stock trading resources. B. An investment club. An investment club is a group of 10 to 20 people who pool their investment together. They teach others and help them invest in stocks. C. A retirement account. You can also buy stocks through your individual retirement account, IRA, or an employer-matched plan like the 401k retirement plan. Number 2. Selling stocks. We've seen how you can open an account and buy stocks, but how do you know it's the right time to sell? Smart stock traders keep their eyes on the world's most prominent market indices. In the US, that includes the Dow Jones Industrial Average, DJIA, NASDAQ, S&P 500. Additional tips for stock investing. You can reduce risks by following these additional tips. Picking a broker wisely. Pick a broker who can teach you the trade tools and one who understands your investment goal. Stay clean with the IRS. You wouldn't want Uncle Sam to come after you when the money starts coming, so stay in the good books. Diversify. Consider buying stocks from different companies to reduce the risks. Go long-term. Long-term investments take advantage of a short-term stock decline to buy more stocks to sell high when the market improves, so adopt the approach. Be proactive. Monitor the performance of your stocks and take quick action before the stock market falls. When you anticipate a drop in value, you can withdraw your stocks and buy bonds to enjoy fixed returns. Alternatively, you can buy more stocks when their value is low. In conclusion, stock investing can be easy and less complicated when you have the right guide. Luckily for you, I've covered the basics to get you started. Hopefully, this new investment will help you achieve your financial freedom in the long run. I know this video was exciting and you loved it. Also, check out this exciting video about 10 passive income ideas with little money and other life-changing resources